Glad that all of you can join us on this morning at 10 a.m. So what's going to happen today is we're going to start with warrants. That's what I'm going to be covering. It's incredibly exciting because there are so many opportunities in the Hansen market over here. Our government session, we're going to be giving away a bunch of stuff today. We're going to be giving away 10 Starbucks cards, 10 brand new technical analysis books you guys haven't seen before, and we're going to give away one Garmin Vivo Fit 4. Right. A quick disclaimer, as you can see. You can read all of these slides later. I've already uploaded them onto the Webinar Jam platform. So HSI, warrants. Benjamin Graham's one of my favorite investors as well. You can go check out more quotes on our Naga Bites. So today we're going to be covering a few things. We're going to be looking into useful concepts, big picture, trader ROI, and our brand new M4 Mercy strategy, which is going to be covered in lots of detail. And number 3, the third part, the YouTube Kenanga channel. You could have seen all of those things on our Kenanga YouTube. If you don't know it, it is Kenanga channel. We've got almost 20 videos up there by now, so I hope you guys do enjoy it. HSI warrants ingredients are there: advantages, risk, common mistakes, HSI expiry, structured, and company warrants. But today we're going to be looking at HSI M4 Musty. Quick recap. I know some of you have heard this a million times, but you know in how they say, you need to listen to something 6 times before you actually remember it. So you've got all the inputs on the left-hand side, the courses, the webinars, the books. We're giving away some of them today as well. And research reports and news and all of these crazy things. But the reason that you have all of these crazy inputs, these inputs over here, is because you want to put them through a filtration system, which is your technical analysis. It's your brainware, you know, it's all of the stuff that goes on in your brain, which is a list over there, which I find is the most useful. Today, I'm going to be covering just some 3 simple technical analysis tools that you can use, very basic, that you have used in the Malaysian market that you can use in Hang Seng as well to trade the Hang Seng index. Brainware number 2 is trading rules and portfolio management. And also I added a few new things onto this slide. Software, you got your Hong Kong exchange, the HSI futures feed under the word number 2. Components and weightage is over there. Hong Kong news source from Mr. Johan in our last session. Hang Seng constituent changes in that link over there. And after that, you have your output, which is these things. Your output really, at the end of the day, is all you want is entry price, stop loss price, target price. These 3 things. All of this mess of information, the news, the books, the webinars, all you want is 3 things. And to maximize it, you use the Hang Seng Index warrants, the HSI warrants. You assess your mistakes, risks, ask questions, you find a solution, and you keep on going through this cycle again. So a bit more on this news part, which I added on recently, well, last night. I do find it's important to be able to see the world these days in a very unbiased view. As we all know, most media is Western media. But if you want a more holistic view on, for example, the Hang Seng, different kinds of news, you already have these ones. So you can actually see that CNBC and Bloomberg, they're Western, BFM is more Malaysian, and it does cover some international as well. But RTHK News, it's quite useful because it's an English news source. You can get the app from Hong Kong. And RT News, you can get the app as well. It is Russian. So you can actually have a wider view of the world that lets you see everything, you know, lets you make a more balanced judgment of the world news and not just skewed towards either Eastern or Western or whatever biases. Big idea, covered before. I just want to focus on this one topic, which is new as well. I always say if you use a compounding interest calculator, it will be incredibly beneficial to you because if you invest 1K per month for 12 years, if you get a return of 30%, per annum, that's 1 million ringgit. That's the end goal. So I'll put it over here for your convenience. You can see over there, compound interest. If you look at the initial balance on the side, You start with, say, 10,000 ringgit, for example. If you've got an issue balance of, say, 10,000 ringgit, you put it into the compound interest calculator. The link is on Telegram. And the link is at the bottom as well. You get the slides. 10,000 ringgit, 30% ROI annually. All I'm asking for is 30%. You do this over 12 years, you only compound it once. That means 1 year, you only make 30%, all right, from the markets. Malaysian, Hang Seng, Hong Kong, China, whichever market that you prefer. And at the end, and you deposit, save optional 1,000 ringgit every month. That's only 144K, correct? 12, 1K every month, times 12, that's 1 year, times 12 years, that's 144. The difference is 30% per annum is very high. Yeah, it's Chong Lo, it is very high for FD, for a normal savings plan, for bonds. But let me show you why 30% is totally manageable in the next few slides, all right? The idea is once you put it into the compound interest calculator, it'll be 1.2 million, blah, blah, blah. But the difference is if you actually only put 1,000 ringgit every single month for 12 years, the total is only 144. The magic is compounding, which is a 30% ROI. But like our friend just now said earlier, he mentioned that it is very hard to actually get 30%. Is it? For structured warrants and the like, it is not. Previously, traders' ROI from 2020 to 2021, at Kenanga, we focused mainly on Malaysian equities. You can see 22, 12%, 58%, 156%, 8,000%, 837%. But of course, you're going to say, hey, the problem is in Malaysia, it is sector rotation, right? Sector rotation means it moves from sector to sector, what people invest in, the focus or the hot sectors of that month. But the thing about it is the Hang Seng index, it is constantly volatile and it is constantly moving. So let's cover a bit more on the Hang Seng right now. I'll show you the ROIs as well for the Hang Seng, don't worry. So when you look at this slide over here, just a recap of China's regulatory policy, I think a lot of people, they get a bit worried. You can get the links at the bottom when you download the slides. People do get a bit squeamish about China because they're not sure what the government is going to do. The thing is, for me, I find it incredibly predictable what the Chinese government is going to do because they just do what they say. For example, this infographic is really useful because it shows over the past 70 years, China has been very predictable in its regulatory implementation. It starts from the government, and then it filters down to the economy, to the social, and the data highlights are the only things that we see. So whenever we look at the Chinese market, we always see the data highlights only. We only see the right-hand side. You see the star that I drew for you guys? We only see that. We don't really see that they actually do have a lot of regulation that was already planned for, and they are just following through on their plan. Say, for example, let me just show you over here, and you see the bottom part is the GDP that increases. Back over here, what I want to show you is that after a boom period, they always have check and balance that comes in via regulations. You can see China's volatile regulatory cycle from relaxed to tight. So they have it relaxed first to encourage a booming market. Let's say the first one, mining on the top, started all the way in 2003. You see I circled the year in pink just to highlight it to you. Crackdown on illegal mining activities such as mining without license. The green part is booming period. The blue part is regulation period. So after a boom, they would have a regulatory period where they actually try to keep everything check and balance and make sure everything is not getting overheated. For example, dairy products as well, 1999 until 2008, enhanced food safety after the milk scandal of Sanlu Group. After that, you see the next one, anti-corruption campaign with the 8-point regulation to discipline party members. And then third one, I mean the 1, 2, 3, 4, 5, fifth one, gaming license control to protect children's health. So you can see that over there, it's always a boom first. The gaming boom was 2010 all the way to 2017. And in 2018, they actually started doing these contractionary measures. the regulatory periods. So when people are saying that right now they have the new regulation about gaming, it is not surprising because it is already foreseen. You can see China's pattern. I'm all about patterns, right? You can see China's pattern is so clear. They are always pattern. Repeat. So the last one was centralized bulk procurement of drugs to cut price. Same thing as well. So boom and then regulation. Boom and then regulation. So that's how it works over there. China HSI, if you see this bit, you can see that our warrants, I just screenshot our live matrices, 1,000 points up. Each of these live matrices, let's zoom in on one first. HSI CI3. So our Kenanga live matrices, they actually show 1,000 points approximately. That's why some matrices like HSI on the left is from the blue color box I circled over there, 24,502 to the top 25,454. They work the same way as our equity matrices. They show underlying bid price, underlying ask price, warrant bid price, warrant ask price. And you can see the blue colors that I put on the box over there. They're all about 1,000 points approximately. Pink is for put warrants. So they're all about 1,000 points. And you can see they all move differently because they all have different effective gearing, different sensitivity. But we're just going to cover very, very briefly first. Hingto, no, 50% without the time value decay. Just over 2 days. But let me show you why you can actually make 50% in 2 days. So the time value decay is not so much. All right, Hinto. Over here, I just showed a tiny bit in black, just so you know how to read my slides when you receive them. So what I did was, I'm very visual, right? 1,000 points up is ROI 35%. I just minus the top to the bottom. 27 cents, the warrant bid price, say you sold on the bid and you bought on the ask, which is a 19.5 over here. 3.5 is 35 ROI. But how fast can you make this 35 ROI? Can the Hang Seng move 1,000 points in a few days? Yes, it can. Each live matrix shows approximately 1,000 points. I already covered that. So you can see that 1,000 points ROI, 1,000 points is ROI 50%. I did the math for you at the bottom in case you don't believe me. But you guys believe me, right? 1,000 points down is ROI 24%. The way you calculate ROI is the latest number, 56 cents minus 45, divide by the original 45. So it's the new minus the old, divide by the old. So 37 cents minus 28 cents over 28 cents is 27%. You can see that over there as well. So it is possible. Okay, step one, we know it's possible to make money in a Hang Seng index, but how fast can you do it? And why will it challenge equities? What's the big deal about it? So this was over this week. Basic technical analysis, support and resistance lines. At the bottom, I actually write for you my time frames because I know a lot of people ask me for the time frames of my charts. Hingto, put lower ROI means banker anticipates. No, that's just the structure of the product. Don't overthink and think that we're trying to promote puts or promote calls. Hang Seng is volatile. Hang Seng is both ways. Issuers, they make money in both ways. I have a video on how issuers make money on YouTube, but we're directionless. We are neutral. At the bottom, you can see I wrote in my pink color, beautiful handwriting, longest time frame, 1 day candles, 1 year time frame. So I just show you that I've got to cover through a few different time frames and how all of them have opportunities. But the best time frame I realized to be able to make 1,000 points over 2 days is 1 day candlesticks. And that is it. You just need to focus on that. Because do you see my blue color highlight over here? 25,412, my blue color highlights beautifully. I just put the matrix on the same range. I know it's ugly, but it's the same range as the chart. So the chart on the right-hand side is 25,500, right? The blue. Thank you, Joko Tanuwijaja. The live matrix is great now. Thanks to our amazing Naga Warrants team. 24,500 at the bottom over there, the blue color, to the blue color on the chart. So what I did is I just put the matrix over there to show you that it can move 1,000 points in 2 days. All I saw for this one was our HSI CIW, the HSI CIW. I put the code over here. You see this HSI CIW? The live matrix, when we put it in 1 bar lines compared to other issuers, it makes it very easy for you to be able to see how many price the ticks move. We realize this is simpler for a lot of traders. So you can see from the bottom to the top, each of these are 1-day candlesticks. No problem to be making 50% ROI in a day. If you look at the bottom of it, just this simple pattern, a support and resistance. 24,500 at the bottom and 26,500, right? How many points is that? That's already 2,000 points. That's 100% ROI. And my duration for this setup was 9th August to 21st September. So, are you so worried about time value decay when you have 100% on the table waiting for you? Up to you. HSI, HMU. So we're looking at put warrants now. Just now was the call warrants, the CIW in black. You can see over there. And now we're looking at the put warrants over here. HSI, HMW. Same thing as well. I just put the chart according to the matrix. I just kind of, bounced it out. Hingto, then we're going to rebound, already hit and clear the 24,400 heavy. Yes. I actually wrote that in our Telegram that I put 24,500 for me. But yeah, I had the same view as well, Hingto and Zen. So at the bottom over here, you can see I put it exactly to 24,500, 24,502, my beautiful blue circling. And you can see in this whole range, the top to the bottom, the same as earlier, that is 27% down. All I had to do is I look at the pink dots over here, and I noticed that it was touching the support. Wait for it to break through, let it close, make sure it has a confirmation, right? You need to have a confirmation of the close, not just let it bounce intraday and then bounce back up. Support next day opens lower, you short it. Well, not short it, you buy the put warrants. So the index goes from 25,400 all the way to 24,500. Your ROI is, apologies, I scrolled too fast. Your ROI is 27% easily. Of course, it depends on the warrant that you choose, but we'll do that another day. 27%, 2 days. Are you really so worried about time value decay when you've got something like this craziness? Another one that I find very useful, my last few slides, is that Fibonacci retracements. Critical points I wrote at the top there is 61.8, 38.2, 23.6, 78.6. So identify support and resistance. These are all my own annotations. I love drawing on stuff because I'm very visual. I hope you guys are too. And what I wanted to show you is this entire chart. The 25,000 to 26,000 is this tiny little thing. This tiny little part out of this entire crazy chart. This entire chart, it can move so much. And like I said at this bottom part over here, each range is already 1,000 points. So it depends on the ROI that you're having for the warrants, of course, but I'm just showing you that it's very possible to be making these returns. I'm not pulling them out of thin air. And it's not a once in a lifetime opportunity or once in a pandemic opportunity. It is every day. Something significant, if you're a Fibonacci technical analyst like I am, the Hang Seng Index likes to follow the 61.8. So you see my pink color diamonds. 61.8 and 38.2, it has tested support, turn resistance, turn support, turn resistance a few times over here. The red color is the resistance. And then it became a support over there with the green. You see my pink color triangle over there. And it likes to follow the 61.8 as well, where it was touching the support, green color touching the support, touching the support, touching the support. So these are very significant for the HSI. It does follow the 50% retracement as well, but Hang Seng is, Fibonacci, it doesn't use 50% as an official Fibonacci number. I like to pull my time frames all the way to the end since the dinosaurs, and then I zoom in according to the bottom part, which you can see. Same thing as well, if I did a simple support resistance line, you guys can analyze this later on your own free will. Jesse Livermore has this really great quote, which I use a lot. Do not anticipate or move without market confirmation. Being a little late in your trade is your insurance that you're right or wrong. Like I showed you earlier for this part, I don't mind being a little late as long as I'm confirmed, because this thing over here, the pink color, could have easily rebounded back up. You need a confirmation. And yes, we finally have our live matrices up, which I'm very excited about. So as I mentioned, basic support resistance lines, very useful. Same thing as well, 1 minute chart. This is 1,000 points. You see, it moves a lot in a day. I'm just showing you the time frame. Over here, this is 1 minute. 1 minute chart. That's how volatile it is in a day, but you just need to get the long term right. And finally, moving average crossovers, I find it very useful as well. Price is below EMA 20, 50, 100, still negative, not negative, bearish territory. And so that wraps it up for my session. If you want to know a bit more, there is the Kenanga YouTube channel, the HSI Warrant Ingredients. We've covered all of these videos on our YouTube. So please have a look through. We've got about 20, over 30. I've lost count, honestly. We do 15 webinars in a year, so more than that. Warrant ingredients, we've covered as well. HSI warrants, advantages, risk, common mistakes. We have our video up. Please go and check that out. I won't go into it today because I know you want to listen to Mr. Johan. And the Hang Seng expiry. Just so you know, the ticks are the ones that we've already shown to you over there on our term sheets, and the rest you need to give us a call and find out more. Structured warrants versus company warrants, you guys already know this. And perfect. This lovely quote by our Seong Kok Tan. Thank you. I appreciate that you appreciate my insights. I do spend a lot of time developing these things. Don't just focus on your long-term P&L. Focus on how much is on the table for you to take daily, if anything. It was said by a very wise man, Mr. Mark Chu, who actually introduced me to our speaker, Mr. Johan, who is coming up right now. I've known about him for the last 10 years. I've heard many great things about him. I just never thought I had the opportunity to actually introduce the fellow. And what happened was he actually has about 200 million USD assets under management. He's an incredibly heavy hitter. He's the reason that you guys are here today. And remember, for the 5 best questions that you ask Mr. Johan, you'll be getting a Starbucks card and a technical analysis book. And without further ado, I'd like to introduce you to Mr. Johan. Everybody say good morning to Mr. Johan, please. Thank you so much for joining us.
Hi. Good morning.
And don't let his shy demeanor fool you, okay? This guy is crazy experienced.
Hi, good morning, everyone.
All right, the slides are there. Over to you.
Okay, hi. So today I just want to make some, do some updates on the markets and also some reviews since the last seminar. Okay, the Hong Kong Hansen Index since last webinar, last time was August 6th, and it was trading 26,000, and it's the highest close since then is 26,500, and then the lowest close is just recently 24,647. Actually, this is also the year low, the low for this year, and the highest close this year is 30,298. So what happened? Let's see. This is the index chart, daily index charts. You see, we are right now at a support level here. I think the HSI is going to have a breakdown very soon, because it's been testing this low for 3 times already. And then as I mentioned last time, actually there's already a RSI reversal pattern here. right here. But unfortunately, the rebound was not very strong, just rebound from 24,500 to 26,500. As I remember last time, I said the range should be around 265 to 270,000, and then the low should be 24,000. But right now things a little bit changed. I think the low of this year could be even lower. It may test 23,000 within the month because there's some issue coming up. Let's see what's happened. Okay, since August 6th, there's some events happening. I think it's worth to mention. JPMorgan Chase Securities becomes China's first wholly foreign-owned securities company. This is actually a very good news because it's the important step for the international financial institute to get into the Chinese market, and it's quite big because the wholly owned financial institute has never been in China before. So China security sectors could actually benefit from these foreign fund securities firms because they have a very good global perspective, and also they could learn from their business philosophy, business models, and the management style. And the other news I would like to share is about the land selling. The government just clarified the adjustment of land transfer policy for core urban district. Core urban districts means Beijing, Shanghai, Shenzhen, those big cities. And they limit the land premium to 15%. So in a way, it's actually kept the profit for all the land developer. Actually, the housing price could not increase by 15% or even more. So people start to, like investor or home buyers, start to wait along the side. For the past 2 months, the housing transaction all over China is very weak, actually. It's dropped almost, for some gens, 60 to 70% of the turnover transaction. And then some of the cities actually going down quite fast. And then the government also imposed another rules that the developer could not sell their properties 15% below their suggested listed price, because last month the government also imposed a suggested listed price for many cities. So actually you could go to the website and see it, that for certain areas, certain cities, about how much you could buy the house, a flat. So, and another big event is about the China Evergrande. It's actually the focus of the month for few months now, actually. At the beginning of the month, it has talks to sell some assets because the government has urged them to unload some of their assets to lower their debt. But these talks failed because couple of the government-owned enterprise refused to pay a premium for that. So it fails. This is the bad news for them. And then in August, the contract sales dropped 26% year over year to only 38 billion renminbi. And then after that, the Goldman Sachs, the first iBank to cut their target price to $3. It was trading well above $10 a month ago. So and it's downgraded to sell. So it's quite big. And then after that, many of the other iBanks also cut their rating too. Credit ratings agency also cut the credits. They have an investment company that sell investment products. Also, they have a problem to honor the contract too. One of the CEO from the financial arms just announced 3 different kind of redemption plans, which is not paying the products back, but to postpone the maturities. And then there's news about they tell us that September sales will slump consistently. There will be a liquidity problem. And then 2 days ago, the bonds trading held for 1 day. Now the bonds is actually trading at around $30 from 100 of the face value. What's upcoming is the biggest next week. There will be bank interest payment due next week. And then also there's bond semi-annual interest due on September 23rd. The amount is not very big, only 83 million US dollar. But if they could not handle it well, I think it will trigger a default immediately. I think at that time the government may step in. So another key events during this month is the Macau gaming policy change. Macau is just set to begin a public consultation for the revision of the gaming law from 15 September, which will last for 45 days. And this actually means they will start cutting the license. Some rumors said it will cut it from 6 to maybe only 3. And then they will put a government official to the board. The whole thing that they release show investors that there is more risk for the government to extra capital injection and shareholder requirements. And also they will need pre-approval for dividend payments. And casino may have to prioritize social responsibility as a government representative will be introduced to supervise daily operation. And government's valuation multiple will be constrained by higher regulatory risks on top of sector demand weakness. So the central government has stepped up the regulatory and trying to do from internet property gaming to now the Macau gaming. So basically, there's more regulator intervention these days. So I would like to talk about a sector that need to be avoided from maybe the rest of this year until something more clear, like Macau gaming sector. Pretty obvious because of they are changing the game plan, and then also the China real estate sector. Because of this China Evergrande issue, if it does not solve the problem, I think it will overhang for the rest of the year, and there's not much investor interest into this sector. So I could expect the whole sector will going down continuously. And also the property management sector, it used to be one of my favorite, but because of the constraint, the new cap on the 15% cap on the selling price, because of the bank credits shrinking towards those home buyers. So I could expect the home sales will be very weak from now to maybe next year. And the property management companies heavily relying on the past sales. So when the flat delivered to the homeowner, they could start charging the fees. But if these market shrinking, then so do the property management market shrink. So this market should be avoided too. And for Chinese bank, it's actually quite good, but because of the real estate issue, there's very high risk that if some of the big developer go bankrupt, the bad debt for the Chinese bank would rise significantly. And we actually don't know how much could this cost, because not just Evergrande, actually at least 3 of the top land developer has huge debt, and they didn't fulfill the 3-line policy. So that's mean the top 3 land developer actually could not raise any money in the market. They are restricted to do that. So until they lower their debt. So the only way they could lower their debt is to sell their assets or sell their new development. But these 2 ways is a no-go, because the whole market is underwater now, and then the investor is very cautious about buying home or buying land assets. And The other sector I think should be avoided is Chinese insurance, because like Ping An Insurance, they invest heavily on Chinese real estate company, and that portion is not disclosed enough. Only for a single investment in a real estate company called Huaxia Xingfu, that one it's already cost them $45 billion. And all the analysts is expecting a total write-off for that investment, because that developer is very insolvent, is even worse position than the China Evergrande. So insurance companies should be avoided too. Then what should we take a look? Just like last time, I still like utility, like China Resources Power 836. It's just have a very beautiful earning, and people start knowing that 85% of its net profits is contributed from renewable energy, and then wind solar 31% of its capacity to grow 4 times by 5 years. So actually, the valuation of these traditional electricity company is actually using very low traditional PE, but actually, but as you see, for this one, the net profit actually has 85% renewable energy. So it should arguable that it deserves a higher PE matching those new energy electricity company. So I still like this stocks. Another sector I like is Chinese Biotech. It has been quiet for almost 3, 4, 5 months already, and then I think the valuation now is fair. Some of them has a very good pipeline and keep launching new drugs and having new development. But picking a right stock is quite hard for this sector. So I would say, if you want to buy a biotech, it would be better to buy an ETF like this one, GX Biotech 2820. And then the other sector I like is oil and gas sector. PetroChina just has a very nice earning announcement. It is paying dividends almost like, I remember it's like 30 cents or 25 cents RMB. So it's convert to the X shares, it's actually have a 8% yield. Since then, the stock price going up from 3.15 to right now 3.7. But I still think it's attractive because the earning is turning around, and then the natural gas business is growing, and then the traditional oil business is turning profitable soon. Yeah, that's it. So today I would like to answer some of the questions from the audience. Yeah.
Thank you so much, Mr. Johan. We'll start with this one by Seong Kok Tan. It says the HSI range this year is 6,759 points. Is it normal?
Yeah, it is quite normal. HSI usually has, sometimes it's, 6,000 is quite normal. Yeah, sometimes it comes to 8,000. I mean, not from the top to the bottom. The fluctuation could be 8,000. So 6,700 is quite normal.
Yeah, the range, isn't it?
Yeah.
Zen Wong over here has another question. How do you think of China Huarong and Evergrande's effects on China capital markets?
Yeah, as I just mentioned, I think it's a major event right now, because people are not just fear about how they settled it. Is how they settled it wrong, because the money that invests to Evergrande, you could be calculated is about 1 trillion something, 2.7 trillion. But for those other investors like the Chinese bank, the Chinese insurance, we don't know that how much money is invested into the land developer market, not just to Evergrande. because it's not a single event, it's a sector event. And actually the whole sector almost couldn't raise any money at all. So it will overhang for quite a while, and potentially the market could have a very fast drop if something happening. Yeah.
Thank you. From Hing To, what is the correlation strength between the Hansen Cash Market versus China benchmark for this year? Is HSI the leading indicator?
Well, I think the correlation is quite weak recently. For the first half of the years, actually the China Gembot is a better indicator for Hong Kong Hansen Index. Whenever it goes down 2-3%, HSI collapse. So when it's go up, it's follow. But for A50 or the Shanghai Composite, actually it does not follow quite much for the past 2 months, because I think because like the worst sector, they do not have it in A shares. It's in X shares. It's like those the education, the tech giants, land development. These big players are in X shares. I mean in HSI in Hong Kong market. So it does not reflect much.
A similar question, but with a different twist. Alice Wong asks, what is your view on the impact of the bond market in view of the Evergrande event?
Well, I think the governments want to set the example to the rest of the developer using Evergrande. So I don't think the government will save it until it has a default issue coming. I really think that the government will let it default. I mean, not paying those interests and then see how they negotiate with their debtor. So the bonds, I don't think that it's worth investing if this is what you are actually asking. The risk is quite high. That's why right now it's trading at $20 out of 100, and some of them is going to expire soon, by the end of this year, and also April next year, and then next week, September 23rd, there will be interest payment for the bonds that the company needs to deliver, and the amount wasn't big, only about $650 million of Hong Kong dollars only. So we will see next week how they handle it. If they could not fulfill the obligation, I think the company may have big trouble. Yeah.
All right, last question on Evergrande. It seems to be in everybody's mind because the media is playing it out in a big way. We see a lot of videos. This Mr. Van Lee has a few questions. You can skip the first one because that is quite clear. You've already answered that question. But his next question is, does this mean the property bubble pops in China? And what time frame are we looking at for China regulation impacts on the market will subside? If we are long-term investors, when to return to Hong Kong and China markets?
Okay. For the first question, I think the crisis, the Evergrande crisis, does not mean the Chinese property markets will go bust. I think exactly the opposite. The government wants to stop it before happening. So that's why they keep constrained those developers to borrow more money to buy land. They at the beginning of the year, they already ceased the regulatory land auction. They just allow 2 auctions per year. So this actually slowing down those developer land building speed, which actually is in the long run is healthier because in the past, every time there's a crisis, the government just print money and then save the whole market, not just the property market, but the whole financial market. But this time they stopped doing it. They just let the land developer think about how to liquidate or how to slow down the business. Because in the past, every time they inject the money, land developer keep buying land with very high price, building up their land bank without looking at their own balance sheet. So right now, the government is doing is trying to let the land developer to think wisely how to make things less outrageous. Okay? I mean, yeah. And then for the second.
Oh, my apologies. 1 second.
Yes, actually, this topic could go very far.
Yes.
Yeah, but
The time frame.
Yeah, what's the time frame? Oh, for the time frame, I think we could look at this Evergrande incidents. It could have an answer very soon. Next week, if they issue the bond dividend, then the Chinese bank will ask them to pay their interest, because there is also interest due this month, the end of this month. So if they could do this too, I think things will be better. But if they could not fulfill these two obligations, I think by the end of month we could see something very ugly, and then the government will really step in, and then maybe they will call for scheduled liquidation, I think. Yeah, and very likely, I think the fate of this company will be controlled by the state-owned developer. Yeah.
From Grace Ng, this question is more to do with China versus the US, how they manage their how they manage their countries differently. Grace Ng asks, although China is going for a clampdown, the Fed seems to be scared of the slightest pull on the Dow Jones. I'm assuming it's Dow Jones. How do you think this will play out? Or what are the key differences in how they handle defaults, bailouts differently, China versus the US?
Okay, interesting. For the US, the company hired lobbyists, and then they influence the policymaker. And then in China, before is similar, but they don't hire lobbyists. But now it's pretty obvious the policymaker is not going to get influenced by the public trade company. So yeah, it's quite a lot difference now. I would say different country has different system, so we could not say which one is the better. But from investment standpoint, if you understand enough into those policymakers' mindset, I think it would not be too different. In China right now, the policy wants to take care of the people because the growth, the birth rate is dropping significantly, and then there's a lot of wealth differences between the super wealth and normal people, and quite sure I think the government what they is doing is to trying to string the gap between these two. So if you think like that, then you understand why they control the gaming, why they don't want the post school education, and also this land developer fiasco. Yeah.
Understand. From Kenny Chia, a similar question as well on China-US relations. How does Biden's international policies affect HSI mid or long term, or does it affect it at all? Is China and Hong Kong in a silo?
Okay. At the beginning of the month, I heard rumors that they ordered some shipment in the port, US, I mean, Biden. and to stop there, and then they want to put a tax on those products, and those are solar panel. And then that's why in a very short period of time, some of the solar play drop quite fast. But after 2 weeks, there's nothing follow up. So I think Biden's not doing a trade war at this moment, but they are putting it into the Chinese policymakers' mind that they want to launch a 301k, and I think this will only happen after October, after the G20, because from rumors that last week Biden called President Xi and then request a meeting in the G20, and then because of many issues, the Chinese president may not go to the G20 this year. So I think we need to be careful on how the G20 statements after the meeting, because very likely they will talk about a lot of the unfair subsidies from the governments, which is has been history like for a long time already. And so so if you say the international policy, it will affect HSI in the short run too. So let's see how the October meetings go.
Fascinating, especially since you mentioned that President Xi might not be showing up. All right, so we've covered a lot of policy, and we've covered a lot of foreign policy as well, and government regulation. Let's go more into investing and trading. What can us Malaysians actually do? So we have an excellent question from MK Tan. Mr. Johan, what are your guiding principles in your investment strategies?
Oh, yeah, it's simple. Try not to lose big money. You will lose money, but try not to lose big, and then have enough cash level. So when things are settled down, you could have enough cash to buy what you like. Otherwise, if you hold too much stocks investment, you go down with the price, and then at the bottom, you know it's bottom, but you could not afford to do it. So to buy more, then that would be a problem. So so my number one strategy is try to prevent massive losses.
I love that. Do not be fully invested in the market, and it's okay to lose a little, just don't lose much. Similarly, Ed G has a question, a personal question, but I'm sure everybody will be keen to hear. If I give you USD 100K as a gift, probably that's how much Mr. Johan's suit costs, but let's say as a gift, how would you personally invest it according to what you've just shared today?
The things that I recommend is basically the things, the stocks and sectors that I like.
All right, but to say, if we were to summarize it, then you would be saying that Hansen, you foresee that there's possible for it to, let me turn on my camera, for it to drop to 23,000, no problem, like you mentioned, because you see other regulatory frameworks coming into play. So that will be things which have a negative bias or a bearish bias, like put warrants, for example.
That's right.
Or shorting the index, but it's very expensive for us to do futures in Malaysia with the conversion. I think like 30K or something like that. But let's say besides that, if somebody, for example, your own kids, Mr. Johan, you want to tell them, hey, here's a beginner way to start trading. Your portfolio is $100,000 US. What would you advise your son or daughter to start with?
Oh, so it's more like a wealth management. Well, I will ask them to have maybe 50% of stocks at most, and then the other could buy some Bitcoins.
How much percentage in Bitcoin?
I shouldn't say Bitcoins, cryptos. Because I For wealth management, I think 10% of the wealth to put into cryptos is reasonable. Yeah, 5%, and then 50% stocks, and another you could buy some very stable fund that have bonds in it. Yeah.
Yeah, it is. So you're saying it's a barbell strategy, heavy on both sides. One very low risk, medium risk, and one very high risk.
Yeah.
Right. To balance it out. All right, let's go back to Hang Seng Index again. For Fu Zun Hin, for the next 5 days, short or long HSI, Mr. Johan has already answered that question, but feel free to just drill it in for them, Mr. Johan.
Yeah, I will short or avoid long, I should say. Maybe I should not directly say short, but avoid the long, okay?
Avoid the long, very sensitive
Yeah,
topic.
because you see the September 23rd, the bond dividend thing. Yeah, that's the key. Yeah.
All right, so we're going to cover a bit on the Chinese government and their policies. So the Common Prosperity Policy. Philip Kwan asks, with tech companies such as Alibaba and Tencent pledging billions towards the Common Prosperity Policy, can this be a bullish indicator for the tech sector, or is it more like donation appeasement? It doesn't signify bullishness, but it just means it's more neutral. Do you have an opinion on this?
I think quite neutral. Just telling people that they're complying with the government's policy. I would say some investor maybe fear that if they make more money, I mean the company, do they need to donate more? Because in that way, then it's not an NGO, but it's almost like a non-profit for them. Yeah.
For our Malaysian viewers, this is a poor correlation, but you would say something like our rubber glove companies, similar as well. There was a massive boom and there were many donations, but the share price, you know what it is now, it did not improve. So Kwan Jin Ang, please comment on the education sector and technology sector. You already covered technology. If you'd like to comment on the education sector.
Okay, for the education sector, I think need to be avoided totally. Yeah, unless you find some of the education company that is not teaching people after school, maybe it's about adults post education training. Maybe those companies could still survive. Other than that, I think should avoid the education sector. And for technology sector, I think should avoid too. The only one that I think is tradable, not even buy, I think, is Tencent. All others have so much risk right now, I think. Yeah, because the valuation changed so much from one year ago to now. I don't think you could use 80, 90 PE to value a tech company in China now. Yeah.
Thank you. Ivy Lee, we've already mentioned, I'm just addressing one of our participants. I believe IVL, sorry, I'm not sure what your surname is. Mr. Johan has already answered the question. What are sectors that are more promising going forward that are not affected by China regulations? But Mr. Johan, if there are any specific sectors or stocks that you think will not be affected by regulation, that means stocks that never experience a boom, perhaps?
I think utility is still undervalued. Yeah, because
do you mind repeating that?
Utility stocks, utility sectors. Yeah, because they was making big losses from the coal-fired plants, but a lot of them is shifting from coal-fired plants to more green energy. So I think this movement will continue, and you will see electricity company has improving profits earning in the future. Yeah, and of course they usually pay big dividends, and which is favorable in this market.
Does that mean there's going to be a temporary pullback because it will require a big capital injection by these companies, or do you think people have already priced that in? That's an Isabel question.
You mean the
for utilities?
For utilities.
Yeah, I mean, do you think that people have already priced in that?
No,
not yet.
Not yet. It has a great one this year from like let's say the China resource, the 836 that I mentioned before. It was $11 and peak is $21. But I think if you could see it, 15, 16 is very attractive. Yeah. So the pullback wasn't that much, only 10, 15% maybe. Yeah. But you will have a very nice, I think it will have a very nice upside in the future. Okay.
If you say it's very nice, we're very compelled to believe you. Speaking of disruption, Cheong Chun Hao mentions, will Alipay and WeChat Pay be eventually totally wiped out after the introduction of the digital renminbi?
Oh, that's a big question. I think nobody knows. It's something new. Not even the US has done this before. So I don't think it will wipe out. I think actually Alipay and WeChat Pay could assist the digital renminbi. In that sense, I think there will be more control on how the money flow from one sector to the other sector, or how there will be more monitor on the consumer spending, I think. Yeah.
And after a boom, there'll be more regulation on the consumer spending and digital renminbi, right?
Yeah.
That's how it works. Similarly, GE Ng. Oh, hello, GE Ng. It was recently reported that China authorities are now shifting its focus to Alipay. How will this impact the HSI market arising from this crackdown?
I think this one would not affect the market too much because I see for the past 2-3 weeks there's some negative news in the tech sector too, but the market handling it quite well. I think the valuation at this point for those tech is quite pricing. But there's another issue that drives the market down, like the Macau surprise and also the Evergrande incidents. So for the tech, I think is okay, but I still would stay away from that because I don't see that as upside. Yeah, that's the problem.
Cheong Sija, similarly, can comment about solar energy sectors like Sinyi Solar.
Okay, the solar energy sector actually has 3 parts. There's upstream, midstream, and downstream. I think upstream and downstream is better play. Sinyi Solar is actually the midstream. It get the material from the upstream to make the solar glass, and then they put it into a module and then sell it to solar company, electricity company. So they will have cost pressure from the upstream, and also because from the downstream there could maybe the expansion is not catching up. So I don't like. I didn't say I don't like, but I would rather invest in. I would rather pick the upstream like 1799, and actually Hong Kong doesn't have much choice. And then for the downstream, Longyuan, 916, 956, 1798. These 3 companies is quite good. And of course, 836, the China resources company actually. Is a green energy company, you could say, because 85% of the profit is from renewable. Yeah.
Since we're on this topic, Wakim Arul Raj asks, what's your take on BYD, Meituan, and Xiaomi?
Oh, in the long run, I will avoid Meituan. The fate of the company is quite uncertain right now. Don't know how the governments wants to control their hiring policy, because they keep the government keep mentioning into all sectors, every sectors need to pay well, give good benefits to their employee. So I think and Meituan is one of the biggest employer, I think, in China too. So I will avoid Meituan. And then Xiaomi is very good company with very good products. Is the second or third largest cell phone company right now. But I don't understand why the sentiment is quite weak for these stocks. I like it for the long run, but I don't think if you buy it now, you will make money. But BYD, I think if you buy it at the right price, it's good for short term and long term, because its car sales is good. It has a battery business that all the other auto company needs to buy the products from them. And also it's actually a tech company, because they invest heavily on new products, not just auto related, but also other technology products, like the material that makes the battery, and also like the chipset for auto parts, for the automobile. Yeah. So between the three of them, I like BYD better. Yeah.
All right, following from that question, Yuk Long Liu asks, because earlier you spoke about how a company must be very well-rounded these days. They must pay good dividends, they must be good to their employees, they must have good corporate governance. So Yuk Long Liu asks, Mr. Johan, how do you choose a good stock? What is the criteria or requirements when choosing a good stock, in your opinion?
Actually, the concept is better to choose a stock that the market likes. It's not a good stock that you like. So last year, of course, you buy Meituan. Of course, you buy Alibaba and also all the tech company. Those are good stock at that time. But right now, the market sentiments tells you that they like securities, like better dividend, certain cash flow, lower debt, low government influence policy, lower government influence. Yeah. So combine these four points. I would only pick those one that I recommend, like utilities, oil and gas, and also biotech. Or the other, you could find some very innovative stocks, big cap, but it's not for everyday trader, I think. Yeah.
Just this Isabel question, do you personally intraday trade, or do you midterm trade, or do you long-term as well? Which ones do you do personally, Mr. Johan, and which one do you advise for a retail investor?
I think right now, weekly, if you pick a stock that very good, like the 836, you could put your money and longer term. But if some other stocks, if like GD, BYD, I think is a short-term trade. Yeah, so it depends on the valuation of the stock that you pick, and also the sector of those stocks that you pick. For those stocks or sector that has higher dividend, you could put your money longer, I think. Yeah.
Your crypto comment just now had a flood of questions from Jesse Wong, for example. It's always a very contested topic, right, crypto? So Jesse Wong asks why crypto Bitcoin has no intrinsic value, and Patrick Look asks, can buy altcoins like Cardano or Algo instead of just Bitcoin and Ethereum. So would you like to comment? You hit a hot button over there, Mr.
Yeah,
Johan.
but I'm not an expert on cryptos, so but I still mentioned cryptos, but not Bitcoin, because I think right now to counter the inflation, gold is not the main products now. I think the crypto is doing way better than the gold to handle to hedge against the inflation or the devaluation of currency. So that's why I think crypto should be put into your portfolio, but not more than 10%, maybe 5, maybe 8. That depends on your risk appetites. But which is the best? Honestly, I didn't know. I would say if I were doing this, I may not buy crypto. I may buy some US company that's invested in crypto, or some fund that has crypto related stocks in it. Yeah, and then those are the other story. Yeah, so I could not answer directly to which cryptocurrency is the best. Yeah.
I understand totally. You're a Hang Seng Hong Kong China expert. You know, if we want a crypto opinion, then we can attend a crypto webinar, right? But just to mention something from that bit, like you said earlier, we just cannot fight the market. If Elon Musk does not want to use Bitcoin and he's so against it, why do you want to go and fight Elon Musk, right? So this next question is very interesting. Jesse Wong, may I know who are the market makers in the Hong Kong exchange? Reason being, markets are easily manipulated. I can answer the question for you, Jesse. You're looking at one. And there's another one in our chats who is actually present watching this webinar as well. But Mr. Johan, if you'd like to answer that question.
Well, I think it's all the investors that following the policy changes, the news, and that move the markets. There's no single buyer or seller that could really move the whole index. Yeah, but for some stocks, mid cap stock, there should be some market maker, but I didn't know that. Yeah.
That is, if you can see Mr. Johan's smile, I think that is the most clear answer. His mischievous smile tells you everything. Zen Wong, how about Ganfeng Lithium?
Oh, actually, the product's prices keep going up, but it's attracted the attention from the government policymaker. So last week, two of the high-rank policymakers outspeak, saying these kind of material is going too high and should be controlled. So for the past 2 days, it's not doing well. I think at this moment should be avoid, maybe for a week, and see how it goes, because very soon maybe the policymaker will clarify their concern, and because this is actually one of the strategic material that the EV sector needs, so I don't think this could be highly controlled by the government. Yeah. So the weakness is short term, I would say. Yeah.
So next question, how about Baidu from Lily Tam?
Baidu, actually, I don't like it too much. For all the tech, I would just stick with Tencent. Yeah, Baidu is kind of a company, has everything, but it's a weaker version of Tencent. So why don't we pick Tencent? Both of the company, they invest in very large scale of area in the technology sector. But I think Tencent is doing much better than Baidu.
Ko Sun Keng asked, how about EV sector's future? I think I'll interpret his question as because a lot of EV plays, whenever you have a boom in the Chinese market, there'll be regulation to tighten it, right? The check and balance. After EV sector boom, there'll be regulation, of course, but what do you think about the EV sector maybe now and in the future, would be his question.
I think the EV sector is is very bright, but there's a lot of companies doing it now. You will not know which few of them are the winners. So I would say try to look for those supplier. It will be almost guarantee the success, because more automaker, they need more parts, more the lens, auto chips, yeah, and material. You say aluminum is skyrocketing for the past one year, is because many companies joining the EV sector, making EV car. So and they need to use a lot of aluminum. So yeah, so I think that's a better way to invest into this sector. Avoid picking one or two car maker. Need to diversify, or just trying to buy the supplier.
So try to go more upstream, right?
Yeah, that's right.
Zen Wong also would like your comments on China Soft.
China Soft has been, is it 354? I think it is. It's actually a subsidiary. It's not official, but it's actually a subsidiary of Huawei. Before they are doing some heavy labor job for Huawei, like programming, hire a bunch of programmer to doing something that Huawei doesn't want to do. But now it seems like the things is changing because the reliance on Huawei is weakening now, and also Huawei is going into the autopilot business, and some of the programming and developing job, they pass it to China Soft. So I think China Soft is a good investment, but it has been going up quite fast for these years. I think we need to take a look. The earnings is catching up. At least the sales growth, the sales revenue needs to grow faster than before. Yeah.
From Stephen Lai, who is the #1 battery maker in China now for EV?
Oh, I think it's not listed in Hong Kong. It's listed in China. Called Lin de Shidai. Yeah. I don't remember the code name, but you could look up to it. It's not just only the China biggest. I think maybe the Asia or even the world, one of the world biggest too. So yeah, you could take a look at this one. Yeah. But it's only traded in Asia.
Young Wayne Kid asks, copper wires perhaps? I think you guys, I see a lot of people that are trying to take what you said just now and try to find stocks which are more supplier based. That's why.
Yeah, actually, copper, aluminum, and steel is actually quite good recently. But it's also attracts the government's attention, so they are trying to open up their reserves. So it's in maybe this 1-2 weeks, there will be some pressure on these kinds of stocks, aluminum, copper, and steel. But in the long run, it will not stop going up. I'm not saying the stock, but the material, because there's a lot of supplies constraint. Like in the Africa, there's New Guinea has some political issues, and they are the largest aluminum exporter in the world. So these kind of fear overhang, so people will keep buying aluminum and copper for at least maybe the rest of the year. Yeah.
So we've already covered a lot of sector, we've covered government regulation. Let's go a bit more into what traders can actually use. Let's go focus a bit more on technical analysis. Let's have this question by Ka Kiet Chiang. Hi, Johan. Based on the HSI daily charts, we see a triple bottom, but you mentioned it may break the support and test lower. Can you share your TA view on this, please?
Well, I would be quite cautious to use technical analysis at this point because it's events driven. So for those kind of thing happening, it's like I don't want to say it, but sometimes you see in some kind of crisis it will happen like this. And you shouldn't use technical. You should listen to the newspaper, read all the news, see how the things go, see is people getting more clarified on the issue. If not, then the rebound won't last long. Yeah, what I say is so it's quite dangerous to just rely on technical analysis at this point. Yeah, so I wouldn't suggest. Yeah.
Yeah, if the fundamental news is already bearish and you expect it to rebound just on technicals, that is very unlikely. And besides, technicals require confirmation. So the day that it breaks down, that means it is already irrelevant.
Yeah, right.
It's already been making lower lows anyway. The downtrend chart is very clear.
Yeah.
All right, so let's go a bit more into technicals, like we mentioned earlier. Not technicals, but more trading related. Fu Zunhin for the next day, short or long HSI?
Oh, I think I would avoid long. Yeah. Yeah.
We've got our final few questions, and then we're going to get to the garment section. So, Mr. Johan, just 3 more questions, okay?
Yeah. Okay. No problem.
Thank you so much. Appreciate your time with us.
I enjoy it a lot. Yeah.
Excellent. Young Wing Kit. Mr. Johan, what keeps you up at nights other than football?
No, I sleep quite early now, 1 o'clock. So, yeah, because you need to actually get up 6 or 6:30 and then read all the news before the market open. And you need to also read all the news in the US side. So it takes 1-2 hours, and also some research report. You just look around and see anything could have a trading idea. Yeah. For one example, if there's new overseas, like the one that I said in the Africa, there's a political issue, then that day people go into the market to buy 2600 because they know that that place has a huge aluminum mine, and yeah, something like that. Yeah, that's how I do it. Yeah.
I love how you are very fluid in being able to move your capital around, Mr. Johan, because I think that's how investors should be. You know, you go where the opportunity calls you, right?
Yeah.
And you just have to be prepared already. That means you already have accounts open in that market. So when it comes immediately, not that you hear the news and you start opening accounts, right?
Yeah, that's right. That's right.
Yeah. Rachel Yun asks, Mr. Johan, how do you use news as your source for investing for your own practice? As there is this saying, sell on news.
In some case by case, this is actually. If it's surprise news, then I don't think it's a sell on news. You know, if you sell on news, that stock going up for a long time, and then there's news coming in. Okay, let's say on Friday, the Hong Kong land developer is actually going up with huge volume, and then at the same time that the Chinese government mentioned that Hong Kong land developer should comply with Chinese policy and doing more goods to the country, and then trying to create more flats to the exact word should be to lower the price, to lower the property price in Hong Kong. But that day actually I didn't see people buying, but actually it's going up because of short covering. That's the sell on news. The reverse is buy on news. Yeah. So you need to see how the stock goes before the news coming.
Agree. You cannot use trading quotes, just very general trading quotes, just to throw it in when it's accurate. For example, a lot of people, when the stock is downtrending and they are actually long or they bought the stock and they buy at a lower price, they never plan to dollar cost average. They just say, oh, I'm averaging down. But that's not how it works, isn't it? It really depends on the stock's performance. You can't just throw in, oh, I buy on weakness, oh, I buy on dip, when you don't actually analyze the whole stock first. You can't just use quotes to suit your feeling of pressing or selling.
Yeah, that's right.
Last two questions. Hon Chong Lo. Mr. Johan, thank you so much for your sharing on China stocks and the market. Can you give me some advice for a couple of good sites for daily China, Hong Kong stocks?
Yeah, I could send out later. Yeah, I think I did it last time too, but I could send it out again. Yeah, the name I didn't remember.
You gave us China Wall Street or Hong Kong Wall Street. I remember that one.
Yeah, I could give a couple of more. Yeah.
Yeah, personally, I like you looking at the RTHK News website because it is in English. I'm a banana. Is there any other good websites that you can share with us? We would love to hear it, or any apps. You can send it to us later as well, Mr. Johan.
Sure.
Thank you. Last question, CP Ng. Oh, data chips. How important is Malaysia in the Chinese government's eyes?
Oh, I think in the Chinese government eyes, there's only one. I think US is the only one country they care about now. Yeah, not even Taiwan or Japan. Yeah, or no other country. But I think as a trading partner, I think maybe the agriculture products is quite important for Chinese. Yeah. Other than that,
pork, soybean.
Yeah. Other than that, I don't think there's much. There's no big business between the two countries.
All right, and that wraps it up. Mr. Johan, thank you so much. We're going to have our Garmin session after this, and we'll be giving away one Garmin, so stay tuned for that. We're giving away a Vivo Fit 4. Mr. Johan, thank you so much.
Thank you for having me here. Yeah, thank you.
Please thank Mr. Johan. He spent a long Saturday morning with us, letting us dissect his brain. So thank you so much, Mr. Johan. We really appreciate it. And last time when you gave us that insight into the Hang Seng on our last talk, it actually did drop 2,000 points the day after.
Yeah.
Because you were showing us the chart right at the top. The next day it was a doji and then it dropped down. Yeah. So it was very accurate, and thank you so much. We really appreciate it, our man on the ground in Hong Kong.
I hope I'm helpful. Okay. Thank you.
So now we've got our quick session with the Garmin, Mr. Shah. He is our representative, a marketing representative from Garmin. And we're going to tune in to him at the moment. We're going to give you a quick stretch after that really insightful session. I do recommend you stand up, get started. Our marketing executive, product specialist, and Garmin Run coach.
I'm Akasha. I'm from Garmin Malaysia. I'm a marketing executive and also Garmin Running Club Malaysia coach, one of the head coach. Okay. So what we're going to do today is just a simple and basic stretch. So mostly you have been sit down for a long period of time. So we're going to do some stretch to release your muscles. Okay. So this stretch is going to take around 7 to 10 minutes. So we will have several stretches like cross hand forward. We will have tricep stretch and we have shoulder stretch. Okay. So you guys can follow me for this workout session. All right, so we're gonna play some music so before we start the workout. All right, so the first workout that we're gonna do is a cross hand forward. So cross hand forward is you need to cross your hand forward and bring it inside and outside like this. Okay, so we're gonna bring it inside like this. Okay, so we're gonna do it around 1 minute. So relax. You will feel that your arm, your here, this muscle is stretched. So the best way that when you do this, so when it's flexible like this, it means that you are flexible, so you are fit. Okay. So we'll do it 1 minute. Right. So try to stretch longer like this, and then release. Relax. So you can feel when you do like this, when it release, relax. Your muscle also is relaxed. Right. Then try again. Flex and relax. Right. So flex, hold, and relax. So you're gonna have another 10 seconds left. Okay. 5, 4, 3, 2, 1. Okay. So release. Okay. You feel your arm muscles and everything already stretch, pull up. All right. So the next is tricep stretch. So tricep stretch is we're gonna bring our arm to the side. So you stretch this muscle, right? So push, okay, push, inwards. So make sure your arm is fighting the pressure of your push. So this arm, another arm you will push, okay? You're gonna do around 30 seconds, right? So push and fight so you feel this tension and stress, all right? And change. Another one. Change. Okay, so you feel this muscle. So we're gonna have 10 more minutes, 10 more seconds. All right. Okay. Stretch. And 5, 4, 3, 2, 1. Yeah, and shake it out. So same like with the music. So shake your muscles just to relax and recover. All right. So after that is what we're gonna do is a shoulder stretch. So shoulder stretch is actually you need to bring your arm at the back. Okay, you need to bring your arm at the back like this. Okay. So make sure that at the back is straight. So you feel that you can touch your back. So straight, and you can feel this side muscle is stretched. Okay. So stretch it. Yes. All right. So hold and release. And try again. Do one more time. Right. Release. Okay. Next. Change. Another one. Right. Playing music. Yeah. Okay. So relax. Stress. Okay. Relax. Okay. And do it again. So stretch. So make sure it's straight. You can touch your back. Okay, you can touch your back shoulder here. All right. So 10 more seconds. 5, 4, 3, 2, 1. All right. So yeah. So relax. So you can feel the stress. So you can feel the stressness of the muscle. All right. So next, what we're gonna do is a Buddha press. Okay. So for Buddha press, it's very good for your this arm muscles. Because sometimes when you stretch, you only stretch this part, the tricep. You only stretch your shoulder, but you don't stretch this. Okay. Because here also has muscle, so you need to stretch. You need to relax. You need to release. Okay. So Buddha press is press and hold and bring it upward and downward. Okay. So bring upwards and downwards. So I do a minute, right? So bring. Next one, when it goes up, you inhale, and goes down, you exhale. Okay, because when we go up, we stress more. We put more stress on the muscle. Okay, so we go up is inhale. So going down is exhale. Okay. So relax. This is like how you can meditate. You can feel relaxed, like yoga. All right. So relax. We have 15 seconds left. 5, 4, 3, 2, and 1. All right. So relax, rest, recover. So after this, we will do for our lower back. So the next workout is for our lower back muscle. So this muscle, when we stretch our muscle, you can feel like the lower back bones will like crack a bit. Okay, so yeah, it will help you also. So when you sit on your chair, you have this armrest. Okay, so you have this armrest. So you need to pull the end of your armrest at the back here. So you pull your body, only your body. It's not your leg or anything. Not your like this. Not the whole of the chair. Okay, just only your upper body. Okay, so stretch it. You can feel that your muscle, your lower back, and your back is stretched out. Okay, so bring it. Okay, so relax. Yeah, so when you relax, you can feel that you are twisting very good. Okay, and then also you are right, and also one more thing is like this. So you bring all of your head, your face is to the forward, and you bring it to the side, and relax. Bring another one. Okay. All right. So release, relax, and swing your arm. Okay. Swing your arm. And last one, yeah, this is very important. So we'll do inhale and exhale. Okay, so you guys can close your eyes for a while. Okay, and inhale using your nose. Inhale using your nose. Exhale using your mouth. Inhale. Exhale. Inhale. Stay, don't yet exhale, don't push it yet, stay and exhale. So yeah, you will feel relaxed now. Okay, so yeah, this is just some of the workouts I can share with you to stretch out your body, your muscles and everything, and to meditate so you will feel less stress and less pressure. Okay, so recover. So this is the best thing. Okay, so yeah, that is from me. So that's all for me. Thank you so much.
And that was it, guys. Thank you so much. If you've actually enjoyed it, stayed until now, I'm going to give away a prize to somebody who has the word Garmin in there. So your effort is not wasted. If you put the word Garmin, I will be choosing a winner from whoever's word is Garmin over there. Awesome. Thank you so much, ladies and gents, for joining us today. 12:02 on the dot. Stretch it out. Remember, we're giving away 5 prizes for the best question on our chat just now with Mr. Johan. Another 5 winners will be chosen from the Facebook. So we can actually put a link to our Kenanga Facebook. I'll be sending all this on Telegram. Mr. Johan's slides and my own slides will be available on the Kenanga Telegram, which you can see on the top of the chat. And we'll be having Mr. Johan come in and speak for us for the additional few weeks. He'll be speaking with us once a month. So I do hope that you guys will benefit from that. Over here is our Kenanga Facebook. The top 5 best comments will be getting a technical analysis book and a 50 ringgit Starbucks voucher. And to all of you who are putting the word Garmin in right now, we'll also be doing that. So let's see. And as you know, we've got a really great quote by one of our favorite guys on the planet. Mr. Mark Chu says, don't just focus on your long-term P&L, focus on how much is on the table for you to take daily, if anything. I love this quote because he says that there's opportunities on the market every day. Don't just be so fixated on making money one way. If there is money to be made on that day, you woke up at night, you saw a news, the next morning there's an opportunity. Like Mr. Johan says, you need to be liquid enough to be able to take the opportunity, right? You can't have yourself fully invested all the time. You need to have some capital. For example, you balance it out. 50% in stocks, like you mentioned, 20% in warrants, perhaps, 10% in different baskets, and maybe 10% liquid as well, for you to be able to take opportunities. Bye. Talk to you soon.